I mean, we have seen that over years in every presentation, but honestly, I mean, when I talk about Germany, yeah, I mean, everyone is hoping for that, but it doesn't happen. I mean, and we're really, I mean, we're in good relationship with all the German lenders, and I mean, honestly, they might be crazy if they would give now super haircuts for guys standing there and making super profits. I mean, why should they do that? For instance, if you see in the residential market, I mean, this market came up in Germany over the last 3-4 years, again, about 20, 30, 40%. So why should you go and sell loans based on that for a certain haircut? I mean, there are some situations, definitely. But this is a very, I mean, below the radar screen and super nitty-gritty business. Okay, I mean, fine. I mean, we have done some deals based on more than 150, 200 million. I mean, that's over. You do not find, and when that comes to the market by a servicer, then there is I mean, a row of 20, 30 people going into that. I mean, this is coming back, you know, when capital is there. I mean, today in Germany, you see everyone who's selling an asset for more than 30 million is doing that by an auction. And that is good. I would also do that. I mean, I'm on the other side, so I do not like that. But I mean, this is the perfect way in getting the best price. And this is what we've seen today. And we've been in 2 or 3 auctions over the last 3-4 months. We always lost because there on the last meters was someone overbidding us by, on an asset, let's say, of 50 million, just overbid us by 3 million, coming from nowhere. Never heard the name, never seen him, whatever. So, and this is the same in these, I mean, coming back to the point, so much money is looking for, whether you define now the opportunistic with 20 plus, how it is in the, definitely in the US, or you're gonna go down to 15, however. Yeah, I mean, 15 IRR in such a market based on interest, I mean, in relation to the today's interest rate, it's enormous return. So it's a free, I mean, it's free lunch for everyone, and you know that for free lunch, there are 1,000 guys in a row, and this is exactly what's going to happen now.
It was I was slightly amused to see that the ECB has apparently exempted certain German banks from the initial valuation test under the AQR. On the basis that their valuations are sustainable and therefore necessarily appropriate.
But still there are some of the German lenders who have bad banks today and who start to sell off those bad banks, even if they don't call it like that yet. But definitely we have seen, I think in the UK it's the same. And when you say the Brits have done the market, it's definitely true as well. So, I mean, in France, what we now see, and this is the first time since 2008, even if on every panel where I was, I think I told everyone that now was the time that we were going to see distressed and opportunistic, and we haven't. That's true. But I think what we've seen now since the beginning of the year is really French banks going without us, without auctions, to the investors they know and they have known in the last cycle, without naming them all right now. And they tell me all that they find opportunities, and they're surprised that the cycle is coming back to them in a much quicker way than they thought, which is a big surprise for us, because what we see is when they do the auctions. We don't see when they do the off-market procedures, and from what I hear, there are some very big transactions going on in the French market right now. So I think that might be driven by the ECB regulations of these French.
And do you think it's partly that, and maybe pricing also then coming in, so that the haircut that they might have taken 6 months ago is not quite as dramatic?
Yeah, of course, of course.
Look, the AQI isn't, I don't think, maybe I gave the wrong impression, it's not the be-all and end-all of the thing that's going to make the European market. I think, well, my view hasn't really changed. The deleveraging that's taking place across Europe, across the real estate industry, set the scene. And it has set the scene for the last couple of years. I think it's the AQR is a component of that to make sure this deleveraging happens. The non-core agenda, which I touched on in terms of, you read it in the FT, it says, such and such banks have decided to create a bad bank, such and such bank have decided to shut their operation in Europe, shut their operation in the UK. You see, I don't know, Bank of Cyprus selling out the UK. And a lot more of that happens. A lot more of these banks saying, I am out of this country, that country, and that country. How are they going to get out? The majority of them, the ones that are in true private ownership, can't do the government-owned bad bank and sit on it for 10 years. They'll get out of it. Not all of this is going to be distress, not all of this is going to be real estate, not all of this is going to be loans. The point is, a big chunk of it will be. And I don't think the AQR will touch all the banks. There is an element of skepticism, rightly or wrongly, as to how much of a fudge would happen at the end. I don't know. But I know that when regulators have looked at balance sheets of banking institutions very carefully, the ones that were heavily into the real estate market, things have happened that have created transaction. NAMA, the UK banks, and others. This was one of the catalysts.
And I mean, UniCredit, an Italian bank, has sort of publicly announced that as a consequence of the AQR, they're going to have to make up quite a lot of capital. And I mean, interestingly, KKR, Opportunity Fund with Alvarez, has done quite a sort of strategic joint venture now with that bank and another Italian bank, where effectively they will agree, subject to certain criteria, to capitalise or put equity into Italian borrowers, which are being refinanced by those banks to help make the loans more sustainable, and obviously they get locked into the equity and the capital stack, which is, and I think that's not purely real estate driven, that's sort of operational business driven, but it's another example where those sort of funds will.